jump into it. The story here, well, fair enough. It's bouncing and all that. This is not what we are looking at. This is a bounce trade, and obviously you can tell that it's going to go hit this number here. The mean 39.20 that clears. It likely 39.21 area and a breather. Oversold conditions, yada yada yada. Everybody knows this stuff. When I say everybody knows this stuff, everybody knows what is going on, right? Or am I misreading that situation? Anybody? Horrible. Can everybody hear me? Am I audible?
Yeah, you're audible.
Okay, right. So let me know. Let me know if when I keep saying okay, everybody knows this situation. I'm hoping because everybody has been with me for quite some time. So that's the reason I understand. I assume that people know this stuff. So that's the reason I keep saying everybody knows this stuff without actually going into the details. But right now it's gonna there you go done 39.20 almost there almost there there you go 39.20 done and done right. So either a breather here or around 39.21 and very likely looking at the ammo here it's gonna clear that and push up to the upside. Well, that's not the trade. Basically the trade was here. Uh, right here. So yesterday, this was a scenario, right? It was hitting that on the SPX, it was hitting a major trend line and came back down. This is where you should have gone, or at least I went heavy short when we broke this 200 moving average. So what was the understanding there? If it broke there, the very chance of it coming back and hitting this 50 moving average was bright, and that's what we capitalize on. So now, yesterday it stopped somewhere about here, and the idea was for it to breach today and push to the downside and test the mean. 3903 area and probably bounce around here. So far, we are getting that bounce, but the mean reversion has not happened here. But there's a decent enough reason why it's happening. Let's go here, SPX. The idea here, right about here. So idea was for it to hit this number and start to take a breather. 5 is detached, and the best outcome was for it to hit this number to the downside, 3970 area, and bounce. That was the best outcome. But looking at all the technicals, there was a pretty decent chance that it would, and then also we'll look at Apple and why we would conclude that it was supposed to move below this 200 moving average. And it broke below the 200 moving average when 2 weeks outputs just printed, right? And the idea was for it to come back down till here yesterday and bounce off of this number. And then later on, the bounce should last into 3940 area, then probably come back down, break this number, come back down to this level here. It was a little bit down yesterday, but 3894 area, this is where it should have come down. And then it did come down to that area, and it is bouncing off of that number right now, 3984, 38, sorry, 3894 area. Well, fair enough. Let it do its thing. And now let's go back into this chart, 1 hour chart. Clearly overbought, as some people pointed out in the chart, right about here, bouncing. And we want to see, and this is, and this is a little bit, I'm not okay with this bounce actually. It should have come back down to yes, actually bounced at 3906, but it should have come down till here, 3901 to 3904 area. It fell short by 2 points, so that's the reason now we have to keep looking at over our shoulders so that it does come back and test the mean again. So the idea was for it to come back and test the mean reversion and then bounce. So that was the upside trade, right? Bounce trade. That was the upside trade. And now what happens if the mean breaches? And yesterday I put out in my note that look at the RSI, it is about to hit the bottom, right? And it did hit the bottom. Same thing should be happening on the SPX, and when the data populates, we'll see this thing coming back down. Now, Williams R is at 50. It is trying to bounce at the 50 level here. Let it do its thing. And because this line is still to the downside, maybe I'm assuming an ephemeral bounce, which is what we're getting as of now. The bounce 39.21 clears, then very likely 39.27 and probably 39.34. Not plotting anything above 39.41 for ES. That means 39.20 area for SPX. 3920 area clears for SPX, then we'll look for further upside. That means 3940, 3945 area clears for ES, then we'll look for further upside. So about 20 points from where it is right now to the downside. This is the area 3900. Again, 20 points to the downside. If that breaches, we're looking forward for a push into 3879 area. Uh, let's round up at 3880 area. So 38 area means for SPX 3860 area in general, 3855 to 3860 area in general. Right now that's the idea. So let's now that's SPX. So basically 20 points to the upside, 20 points to the downside from 3920 from where it is right now. Once it breaches that 3940 to the upside, we'll reassess the upside. Uh, Probably not much, but looking at 3952 all the way 3960 area, basically the 5 and the 8 on the daily. Again, to the downside, the mean, if the mean breaches, then we have lower in a Bollinger Band or the 100 moving average. Both are at the same spot around 3880. So that means 3860 area in general on SPX. And let's keep SPX open here. Right. So right now, 3900, it should be around here. SPX should be somewhere about here. 3900, area. Right now, it should be somewhere about here. So if SPX breaches this area to the downside, then very likely the mean is sitting at 3878. This will get tested. As of now, the mean is at 3878. So 38, very likely the mean will open a little bit lower. So we are expecting a push to the downside, probably about 3860 area. If that breaches, we'll reassess SPX down all the way into 3851 area. That breaches 3800 area. Again, this 3800 has to hold. Not This is not the base case, by the way. This is not the base case. 3800 is not the base case for today. Very likely the base case is about the mean, about 3870, right about 38. It's 3870, 3860 area. These lines will adjust to the data that is, that will get populated once the market opens. About 3860 area. This is what I'm expecting it to come down to. So that's the 3860 area. If that breaches, then we'll reassess the situation. And to the upside, 3900 is right now, 3894 is where it is right now, right about here. So the upside would be 3903, then very likely 3912, and about 3922 to 3945. Sorry, 3920 to 3925 on SPX. If that clears to the upside, then very likely we'll see again the 5 and 8, and these lines will adjust accordingly. The market will open around here, 38, basically sub 3900. The market will open sub 3900, give or take, 5-10 points. Right. So that's the idea here. The 50 moving average is the key to the upside. If it clears above this 50 moving average on the day, then we'll reassess the situation to the upside. And if it breaches below the mean, we'll reassess the situation to the downside. Yeah, that's pretty much it. And looking at the technicals here, MACD ran too hard too fast. So breather, fair enough. Stochastic cross to a downside, especially RSI. I put out a note here. RSI all the way down here. So very likely it's going to be a struggle. I'm expecting same thing here. What happened here? Probably an ephemeral bounce. And if the bounce comes into play, and we'll look at Apple. What is Apple doing, and why we are expecting a bounce there. So expecting probably based on Apple ephemeral bounce, and this thing is still crossed to the downside. So and this green line till the time it comes back down, I'll not be a believer in full bounce capacity. But earnings might change that. Right now, that the SPX is trading based on technicals and earnings expectations. It has got nothing to do with anything else right now. So keep that in mind. Cool thing. Right now, let's jump into DXY. So this, well, before DXY, you want to look at this guy, 10-year, right? So the 10-year, the expectation from 10-year is it moved down to 3.3 and then bouncing. Fair enough. Then let it do its thing. And expectation is this from the 10-year, for it to come back down into 3.23 area and then bounce. That's the expectation from 10-year right now. Longer term, it might actually breach below the second standard deviation and come back into the 50. And should US 10 take this path to the downside, very likely we'll see some more upside in the markets. Not sure how much of an upside, but definitely looks like an upside in the market if 10-year comes down. That's the statement with 10-year. Now, DXY. DXY, this guy needs to bounce so that it clears, at least it tests this 5, or if that clears the 8 on the week. And as long as you have the 10-year, keeps pressure to the downside, DXY will not be able to do that. So we'll have to keep watching this trade all the time. And the conditions are there for this bounce to happen. If SMI starts across to the upside, then we might able to see it come back up into the 5 and the 8. That's a bigger picture. And we want to be trading DXY based on this chart here. Again, this chart is suggesting a bounce again, and probably the same thing. 5, which is right now it is testing and it's been below the 5 on the day. If that clears, expecting a test of the 8, 102.60, 102.70 area. If that clears, then probably 103.17, 103.20, and the mean is sitting all the way up here at 103.50. If it goes up to the mean, and I don't believe this is the case for today, and $1.25, not a big deal, but there needs to be some sort of a trigger for a DXY to do that. As of now, I don't see a trigger for that happening. So basically, I'm again watching the technicals on the same here on the day, 5, and then 5 clears and the 8. And if 8 clears, then we're looking for further upside. Till then, I'm okay with DXY, watching DXY here. Obviously, I'll be watching the DXY on the lower time frames here. And if it's hitting this resistance here, basically it's coming from that 5 on the day. And if it clears that resistance, then I'll be looking forward for further more upside all the way probably into 102.60 area. Right. Okay. Now coming back to our good friend Apple. Right. With Apple, this is still oversold, and even if Apple comes down into, let's say, 125, and I'm not saying it is going to come down into 125. I'm saying if it does, for some reason, if it pushes down further 8 points from where it is right now, that is an extreme scenario. Wouldn't happen. I don't believe that. But I'm just saying, if it even if it comes down here, I'll still be looking to bounce. Right. So that's the idea there. On the daily, this is a fairly clear chart. We were expecting it to hit this number here. If that clears, we were expecting it to hit this number and start to take a breather. And that's what exactly happened. And my understanding was yesterday, if it closed here, the 5 was here, and that's what I put out in my note, 134.20, 134.80. Basically, sub 135, and then hit this number around 133.20, I think. I put out 133.20. It came close to that number pre-market, and it is bouncing, and this is the reason it is bouncing. Now the downside is again the same thing. This 8 on the day. If the 8 breaches, and that's a big if the 8 breaches, then very likely it's going to go hit this number, 133.20, 132.25, and the mean is sitting right about 131 area, 130.97, sub 131, but give or take 131, right? So that's the mean reversion. That would be ideal if it comes back down to the mean. I don't believe that. No. Anyways, we'll reassess the situation if the 8 on the day breaches. If it does breach, then we are looking for a mean reversion. That is pretty logical. And then if Apple does come back down and breaches the 8 on the daily and then starts to come back into the mean, again, this is another bounce part right here, about 130 to 20 area. And if that breaches and the mean reversion happens, then we'll have pretty decent downside in the market, probably better than 1.5%. But give or take, the idea again is to stick with that 1.5% unless unless there's something else going on that that is not being priced in as of now. But rather, what I would say is I'm looking forward for a 1.5% move, or even within 1 to 1.5% move on SPX. Tomorrow would be OPEX, so might accelerate a bit, but not really looking forward for any wild sort of a price action beyond 1.5%. 1.5%, I think, is doable. I think that is the range. Alexa, stop. Right. So that's what the idea here is. Basically to stick with that one and 1.5%, and obviously watching Apple here. If it breaches below the 8, then we're looking forward for further downside. But if it bounces here, then we're looking forward for a push all the way up here into 137. Although, let's go here into Apple 1 hour chart right about here. It is getting oversold, and we knew this works in cycles, right? Overbought, oversold, oversold, overbought. Same thing. Basically, the same exact thing keeps on happening, right? So if it clears right here, basically the super trend here, and no, that's not the super trend. That is the what do you call that, baseline, right? So the baseline clears about 133.90 area. Let's round up at 134 area, right? So baseline clears 134, then we're looking for 134.13, 134.20. That clears, we're looking at a hit of 134.50. But this is where it should, it's for market to stay consistently higher today. Apple needs to stay above 134.70. Basically, this is the line in the sand, the 50 moving average on the hourly. So we want to see Apple stay above this for markets to stabilize or not, or at least to stay buoyant today. uh, and if Apple starts to move to the downside, again, I'll be looking forward for another bounce here around 133 area, 132.95, 133 area, and that breaches, and looking for a push here, 132.40. Not plotting this line here, 130, not really plotting as of now, unless something goes horribly wrong, unless we are misreading something, or some Fed speaker comes out or some data comes out. This is not the base case today. The 200 moving average on the hour is not the base case today. Base case today would probably to the downside, 132.97 area, and probably that breaches 132.30 area. And we're looking for another bounce. And if Apple pushes below this line here, then we are looking forward for sustained downside on SPX. And if Apple stays above the 50 moving average, then we are looking for at least stable SPX, up to stable SPX. Right. And yeah, let's get into Tesla a little bit. Tesla is still in this. The weekly for Tesla is gorgeous here, right? If I wanted to go long, this is, if it were not, if it were not the circumstance where Tesla is running into some headwinds with respect to Elon Musk and whatnot, this looks gorgeous for a swing. Absolutely gorgeous. And if it clears here, the 130, very likely it's going to come up and hit this 130.67 area. If that clears, very likely it's going to, and these lines will adjust to the downward movement today. Probably five will adjust, I don't know, a dollar or two. So probably 129.60, something like that. So, but basically wherever this five will be, expecting Tesla to come back, hit that number. That clears, then we are looking forward for a hit of this one standard deviation on the day, on the week, wherever that will open. Probably it will open about 136 or something. If for the five clear, then we're looking forward for the upside, basically into the eight. And this chart still looks pretty decent here. And if we get a crossover of the MACD here on the week, then I think it'll be sustained. And the next week is Tesla earnings, 25th. So usually Tesla runs up into the earnings and gives up the gains after the earnings. So watch for that trade. Uh, and yesterday Tesla, we plotted it into expectation was this number here after if it cleared that 136 funk. Expectation was for it to hit this number here around 138. It did not happen. Fair enough. Right here. So the idea for Tesla, if it starts to breach this 21 to the downside, the idea for it was it to come. It was for it to come was to down here for it to come down to this five and then the eight and then the hit the mean and bounce. I think pretty much that's what happened here. Let's see 125.34. Where is that? Right about, yeah, right about within the five and the eight, right? And when the market opens, when the data gets populated, these lines will tell us where's the next target. And to the upside, if Tesla clears this number right about here, 130, the expectation is still for, again, these numbers, these lines will get adjusted as the data gets populated for the day. And expectation is that it to the upside, it should come back up and hit this a 21 moving average on the day and then start to push to the downside. Probably the mean reversion is the best outcome to the downside, about 120 to 60, or wherever this mean will open. And we are still in this upside crossover on the MACD. But it makes sense for it to take a breather. It ran up pretty hard, pretty fast, all the way from 104 to about 130, 138. That's pretty decent, 30 plus point run. So fair enough. If anybody caught this run, but keep always keep eye on these crossovers, especially on the daily time frame. These are pretty decent crossovers, and same thing goes to the downside as well. A cool thing. Let's go down here, Tesla. Right. So Tesla hitting a major moving average, getting oversold. Fair enough. It is bouncing, and now we should have expected this to come back into the five, and if that clears, very likely the eight and then 21. The mean is sitting all the way up here, 130. So that's still the expectation to the upside, but this is the path to the upside. If it clears the five, then very likely it'll hit the eight, and very likely it'll hit the 21. Probably a decent breather around 21, and then if that clears, then 128.99 or 129. Right. And to the downside, this is the major, the 50 moving average is what we're watching to the downside. That clears, and then Tesla will move down here to here. We're looking for another bounce. The 50 moving average, if that breaches 124.70 area, another bounce. That breaches about the second standard deviation, right about here, 124, and probably about here 121. After that makes sense, and I'll keep looking for these areas for bounce trades, or if I'm short here, probably I'll keep looking for these, to exit the shorts here or puts here. And if it breaches there, I'll start to put on the same trade again. If that breaches the same trade again, and exit the puts here. If it breaches here, then I'll go for puts down here. Although this is not the base case today, unless Apple starts to move down to its 200 moving average on the hour, then expecting Tesla to also follow suit. But that is not the base case at all. All right. So yesterday, this is the chart we were watching, right? And same thing, baseline broke, five broke, eight broke, came back into the mean. This was an easier trade. And conditions, look at the conditions, oversold, now, sorry, overbought, now oversold. Same thing keeps happening. It repeats and repeats and repeats itself. Oversold, overbought, same thing, same thing, same thing. Now, what I'm watching here, and this bounce made sense. MFI is oversold here, and the SMI is oversold here, RSI is oversold here. So expected bounces here. How far of a bounce, that remains to be seen. That depends on Apple's strength. If Apple continues its push to the upside, then very likely you'll see Tesla breach the 5, 8, 21, and then hit the mean. So this is the path to the upside. And if it breaches below the 50 moving average, then we're looking forward for further downside. All right, that's that. And Bitcoin gave up about 1,000 or 1,200 points. Not a big deal. Right, now let's go into this guy, Netflix. I don't know if anybody's playing the earnings. I don't usually play the earnings because I don't know how it's going to pan out. But the IV, the trade that I suggested, I did not take that trade. I forgot about it because I yesterday I had to rush out. But today, very likely, I think I'll take the trade. But just buy puts and close the puts before the market closes. That's the idea here. So RSI overbought overbought conditions, right? And it started to move SMI to the downside. Same thing, 5, 8. The same thing, same thing, same thing. If it breaches the 8, then we're looking for a push down into 312. And after the earnings, let's say they're saying that the 10% move, right? After earnings, 10% move. Options are implied move is 10%. So that would mean about what? It's about 320. So 32, 32. Maybe my math is a bit, yeah, 32 maybe. So 32 points. They're expecting it to move either to the upside or to the downside. So 32 points would put at uh, 2 290 about, yeah, 290 or 285, somewhere about that. So probably to the downside, they're looking at this number to get tested, the 50 moving average. And if that 50 moving average breaches, then very likely scenario it's going to go down here. Not really plotting this area, but I will be looking to sell some puts around here and use those proceeds to buy puts for this number 306 or even about 300, right? And these puts will be expensive, so you need to figure out a way to pay for these puts. And the calls, let's go here. Let's go on the month. So the SMI is crossing on the month. MACD is about to cross over on the month. So to the upside, you can expect it to hit this number, probably 351. If that clears, very likely scenario is 362. That is again in line with the 10% move. Probably to the upside, I'll be, if I want to buy calls, probably I'll be buying this 350, and I'll be selling somewhere about here 390. Right. So this is the trade that I want to be doing. And if you're doing spreads, probably you want to be selling more calls and then buying less calls. So that should, that's how you want to minimize your risk. Right. And if you are, if you just want to make money selling, and I'll stay above this line here. Right. There you go. That's the idea there with Netflix. If anybody is interested in that. Cool. Anything else in particular we're watching? DXY, the trade here with DXY is watching DXY here. Where's the 1 hour chart? I'll still be watching DXY down here. If it breaches down right here, 102.12, then we're expecting it to hit 102 and hold this line here at 102. If it breaches if DXY goes sub 102, then I think there will be some decent what do you call this? Decent weakness in DXY, and I would expect the markets to hold. And by the way, ES, you see that we just charted this, right? So a damn T, it hit that and took a breather. Right. So and it still has ammo to the upside, and if it breaches, expecting it to hit 39.13. If that breaches, should expect it to hit 39.08. Cool thing. 2 minutes to open. Let's move into live trading.